Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Happy Wednesday, everybody. Hope everyone's morning is off to a good start. So what do we have going on here today? We have the aftermath of Janet Yellen's interview with The Atlantic, and we saw the way the markets responded to just sort of an offhand comment, which she walked back, an offhand comment about rates and the economy heating up. And somebody emailed me, and it was a really astute observation. So thanks for the emails. They're great ways to interact with y'all. And he said, well, how come the bonds didn't move? And I think a lot of this has to do with headlines, algos, initial perceptions of what, say, a soundbite might mean. Yes, gang, we're in the land of the equity markets moving on sound bites, but the underlying reason for her comment could have been any number of things. I don't know. Maybe she had shorts to cover, but I'm just kidding. But who knows, right? And we take each sentence that these folks say. This is a former head of the Fed, right? And I think the markets can take these things very out of context and sometimes move in the weirdest ways. Why did I feel comfortable fading this yesterday? Because bonds didn't move. The heart of the issue wasn't at work at all. It was just sort of this knee-jerk reaction that we saw in only equities. So those are things that, we want to know what those knock-on effects are. And if the first real domino doesn't fall, but other ones are, we know this kind of may be a fake move, if that makes sense. So anyway, with that being said, let's go ahead and jump into our questions. Thanks as always for them. ARK, it's funny. I was looking at ARK-G because that's where most of my attention is right now. The ARKs are, well, right now, it's an interesting place. Now is the time, it's an interesting place in terms of these pullbacks to the 200 exponential moving averages. You'll notice that is what the white dots are on my chart. So I like RK. I'm also looking at, ARK-G. So yeah, I love where your head's at. Let's pick these things up when they're moving lower. As the old saying goes, Wall Street's the only place they seem to throw a sale and nobody comes. And yes, you don't want to buy just anything on sale. You want to buy the things that still have good quality, but are on sale. And I have a hard time wanting to bet against ARK. I'm a little bit more interested in ARK-G. I really don't want all the exposure to Tesla that ARK seems pretty content on having sort of a lot of. I think ARK-G is a little bit more interesting to me, but ARK-K is definitely at a really good level. Selling some puts. I would not, I think, Alex, we're on the same side of that. Absolutely. Yeah, we're definitely on the same side of that conversation. I would not bet against Cathie Wood, but let's also keep in mind just the disproportionate amount of Tesla they have, because when you look at, and we could do a breakout session sometime on ARK and the way that their 5 disruptive sort of technologies sort of Venn diagram overlap, and it sort of brings us to why certain names are in focus. So always remember, whenever you're looking at ARK, that's not a trading conversation at all. It's really, unless you're just trading movement, which is fine. But when you're talking about ARK, in fairness to what they're doing over there, everything they have is a minimum of a 5-year hold time. I mean, they have a very long time horizon. So good stuff. Thank you for the question. Hey there, Prabish. What do I think about KRE? I like KRE even better than IWM. Big fan of financials, gang. When we take a look at what's happening in this current environment, financials are going to benefit. They are benefiting, and they are going to continue to benefit. We have a longer-term XLF position in the Sector Secrets Mastery. For those of you that may not be aware, you can check that out at simplertrading.com/sector. And Yeah, so KRE is definitely part of that narrative. I mean, no doubt. I like the KRE narrative. I like the XLF narrative. And KRE, again, I mentioned that in the same breath with IWM because I would prefer being long the regional banks than small cap right now. But they are in many ways tethered. This is definitely outperforming. As far as JP Morgan goes, I mean, since I already have XLF, remember, JP Morgan is a number 2 weighted name within the XLF. What we did yesterday, and those of you that are in the mastery know, we scooped up some Bank of America for 2 reasons. One, it's a little further down the waiting list. And 2, it's a whole lot less expensive to jump into. Now, I would not call JP Morgan cost prohibitive, but it's a whole lot more bang for my buck to be in XLF and to be in Bank of America. And one of the things I like to do are focus on those more affordable options, not because I'm focused on small account growth, but I'm interested in a scalable approach, a scalable mindset. And this is something that we've always talked about throughout my classes here at Simpler throughout the years. It's not about a $5,000, $10,000, or $1 million account. It's about, can I get into a liquid name, scaling at different levels so that, say in Bank of America, I can have a position. I can afford to have a position perhaps of 10, 20, 30, 40 options. That's not always realistic in higher priced options. For example, I got a lot of questions about Amazon yesterday. And I said, you know what? Let's take a look at XLY, 25% Amazon, but a whole heck of a lot more scalable mindset, scalable entries. We scale in, we scale out. And typically what I'm looking for are 3 different levels within a wider zone to build a position. I don't think levels turn on a dime. So that being said, JP Morgan, I like it. It's definitely tethered to a narrative I already like, but why would I not look at JP Morgan? It's kind of going back to that scalable mindset. Is it a relative outperformer? I think there's a lot within the XLF that looks just gorgeous. So I like where your head's at. All I'm saying is what I'll do is I'll look at names that will be for folks a little bit easier to grab multiple contracts of without necessarily having to go the route of a call vertical or a put credit spread. All right. So thanks for the question. Good stuff. Next up is, let's see. Good morning. Good morning. Lots of good mornings. Absolutely. Okay, got a list here. Lakshmi, yeah, that list ain't gonna happen, but I'm happy to, pick one, and I'm happy to go through one. I'll just grab the first one, ACAD. Okay, ACAD. Let's take a look at ACAD. I appreciate the question. Let's just keep it to a couple symbols. So do I like ACAD? I don't. It's a double red. If you're looking for a zone, however, to buy, what's interesting about where this double red market has gone down to is 1, it's at a very narrow range. 2, it's operating in pretty decent normal volume. And 3, it's sitting at $20. Now, we've got earnings coming up. Let's see what happens after earnings. But usually, in terms of the things that I look for, this would not qualify. It doesn't mean that there's not an opportunity. Chances are it's going to be a breakout or a breakdown. But what I don't have is the advantage, the clarity of a trend. And in this current environment, there are plenty of markets that are trending. And I'm going to prioritize those for our watch list. I'm going to prioritize markets that are benefiting from the reflation environment, markets that are benefiting from their sectors being in uptrends, and then the individual stocks also being in uptrends. All right, so thank you for that. Dollar holding strong. Should roll over and resume its trend? Depends on where, Nikolai, depends on where. So the thing that a lot of traders will do is they'll look at the dollar. I'll be honest, I could care less what the dollar index basket is doing. This is what a lot of currency traders or new currency traders, not what your question is, but I'm just saying out there in traderdom, a lot of new currency traders or sort of uninformed currency traders will look at dollar index. Never care what the dollar index is doing, not really. What you want to do is look at the dollar specifically against other currencies. These are matchups, gang. Right? It's always dollar versus what, not a basket, because the six currencies in that basket are reflecting very different things. Different countries, clearly, different currencies, of course, but what those currencies benefit from are distinctly different. So what we've been doing in the Simpler Futures room is we've been saying, look, dollar, do I want to short it? Yes, but the relationship the dollar has is not equal when I look at dollar versus pound, dollar versus Canadian dollar, dollar versus Australian dollar. What we focused on is the most resilient currency against the dollar, and that's the Canadian dollar. So if you want to know what the dollar is doing, don't look at the basket. That's kind of a newbie error when it comes to currencies. Look at the euro. This is an absolute negative or inverse correlation. Dollar strength, euro weakness, euro strength, dollar weakness. So if you want to look at the dollar, but you don't have, say, the ICE feed to pull the DX futures, which again, it's a basket. It's kind of a mess. You want to look at individual relationships and you'll be on the right track. So I am still a fan of dollar shorts, but mostly against COMDOLs. All right. Thank you for that question. All right. Let's see. WRS, which of my chart lines are the 10-day? Which of my chart lines are the 10-day VWAP and the first of the month VWAP? So the dashed, I guess, is the 10, and the solid cyan is the first of the month. And for those of you that may not know what that's a reference to, check out yesterday's free video over at the Simpler Trading YouTube channel. I went into great detail as to why I think the NAS got hammered the way it did, because it slipped through certain support levels. And by the way, I am long the NAS, because the day before that, I talked about what dips I was going to buy, and that's exactly what I did. So if you're looking at the charts that I have in front of you, so dashed 10-day, solid cyan, first of the month. All right, what would my target on XB entered last Friday? Mike, thanks for the extra detail. That helps a lot. First of all, terrific trade. I mean, well done. And what would my target be? I'll tell you, you're running up into the target area right now. You're not quite there. I don't think we're topping out at the V-score level, which is going to be just in front of the third standard deviation of the volume weighted average price. I don't think we're quite there yet. So you probably have a little bit more upside. Great reflation trade. There are a bunch of steel ETFs that are doing well. X is doing well. I was just looking at a few yesterday, some stocks that were steel related. Definitely like the trade. I would scale out. I wouldn't get flat. I would scale out close to likely 27. That's where the market exhausted last time from a price perspective. From the perspective of volume and V-score, I would say you probably cleared at nearly the third standard deviation. Yeah, so great trade. Great trade. All right, next up is Mark, you picked up some dollar Canada to the short side, taking advantage of short dollar, long Canada. Awesome. I want to do it again. I mean, I'm loving getting in. I've got euro on the radar, Australian dollar on the radar, New Zealand dollar on the radar. Yeah, absolutely. So, what's the main difference between the rooms? Oh, okay. So Peter, if you want to look at the futures room as sort of a futures mastery, in the futures room, I share with you guys my futures day trading and my futures trading. So in the premium videos, I share all my swing entries, corn. What are some of those swing entries? Corn, beans, crude oil, gas. We're in bonds right now. So I share the longer term swings. And then in the chat room, when I'm in there, of course, we have five moderators, traders all together. When I'm in there, I share my intraday live in the room. So it's all things futures. Now, of course, futures are going to overlap with everything that I do, because I do study macro, and macro is going to have a huge, influence on futures. So my analysis is going to overlap between asset classes, but the distinguishing factor is, if you want to trade futures with me, that's the Simpler Futures room. If you want to trade my ETF and stock options trading, that's the Sector Secrets Mastery. So it's two different types of trading. There's no overlap there. Anything that I will ever do in futures will always be in the futures room. And then I've got this separate part of my life where I look at longer term trades in ETF and stock options. And that's the Sector Secrets Mastery. Thanks for the question. All right, Apple. So, gosh, gang, I'll tell you straight up. I thought I really looked at some levels and felt that Apple would be bought. They would have faded some of the weakness. There's some lingo that Danielle uses. I've heard her talk about it, and I love the lingo. The fangover, as in a hangover after that big tech release week, and there is some tendency and rhythm to that. But I felt it would be faded, and it just hasn't been faded yet, even though we've got dividend date just right around the corner. Tech is struggling, and I think that's been helping some reflation markets that have been stuck, like the energy market. But XLK is it's a difficult place to be. Now, why do I bring up XLK? XLK is Apple and Microsoft. Where I think you want to be focused, where we're long in the Sector Secrets Mastery, is XLC. This is Facebook. This is the Googles. And so, Apple and a buyback, yeah, that could help. That could be a catalyst. I'd keep an eye on the volume. Current volume is higher than daily average. I look at where we are in relation to the VWAPs. We're sitting at the VWAP anchor to the first of the year. That's pretty interesting too. So if we're going to find support, it better be pretty darn quick. And we need to get back above that VWAP level and the 55 EMA. So I'd be a little bit cautious with XLK names, Apple and Microsoft. I'd be a little bit more focused on XLY and XLC names. And, I think right now I've got to acknowledge when something doesn't move in a way that my analysis suggests it should. I'm still bullish, by the way. I've just got to back off until my analysis starts to line up with price action. We have to acknowledge that sometimes, it's just out of sync. And right now it's out of sync. All right. Gold. Yeah, I like gold. I want bonds to continue. I want the bond market, TLT or ZB, to continue to move higher. Take bonds with it, likely to take gold with it, likely take silver with it too. I do like gold to the long side. I mean, I've talked about the 1, 2, 3 in bonds and gold. I'm bullish. I think we're just not getting that explosion to the upside that a lot of us are waiting for, but it is a long market for me. It's bullish and bullish only. Right now. Okay. How do I time the exits on my daily chart? Usually based on previous highs, my V-score, major psychological levels, daily price movement ranges, Darvis levels, the culmination of a lot of those things. And here's the most important thing. If you're a pullback buyer like myself, don't put your first profit target above or in the area of new highs. I see that mistake again and again and again. And so if the market has pulled back and there was a previous high, use that, meaning there was some sort of top. And I'm trying to think of a good example right now. I'll just go into Bank of America because we just bought that yesterday. So I know that I really shouldn't expect the market. I'm going to assume the market's going to get stuck around 41, 41.20. It probably won't. But here's the truth, gang. You want to pay yourself, especially if you're an options trader. You want to pay yourself while you can, not when you have to. Now, a lot of you might know the sort of simpler jargon for that, our lingo, and it's an old British saying, and it's feed the ducks while they're quacking. And it's kind of shortened into feed the ducks, which is true. But the second half of that statement, I think, is the most important part, which is you feed the ducks while they're quacking. You take advantage of the momentum while it's happening. You be proactive about it. And so with that being said, there's a good reason that that's a very popular statement, because it's true. It's a very popular thing. And so for me, the quacking is that momentum. And for me also, pay myself while I can, not when I have to, also demands that I don't expect the market to make a brand new high for little old me, that I'm proactive about paying myself in a zone where we've topped out before. And then my second target gets to be incredibly ambitious, Don't make your first target ambitious. It's going to hurt you in the long run. All right. So gang, I've got to wrap up. I'm jumping into the Sector Secrets Mastery right now for our weekly get together. We get together every week for Q&A for about an hour. We review the current trades and watch lists. And then once a month, we get together for our big multi-hour live trading session. So if you're in the Sector Secrets Mastery, I'll see you in the room in just a few seconds. Everyone else, have a great day wherever you're heading next. Keep an eye on what I think is going to continue to be probably a pretty strong market. Okay, gang? I'll see you all tomorrow, same time, same station. Be good to each other.